Hello everyone and welcome to today's CryptoUK in Conversation, where we'll be exploring the FTX fallout 1 month on. We are privileged today to be joined by a fantastic panel to discuss how the collapse of the world's third largest exchange has and will continue to impact our industry, its risk management practices and its regulation. Before we begin, a little housekeeping. This webinar is being recorded and we will make it available to all registrants and also our wider audience in due course. As always, please do ask questions. The chat panel is in the bottom right of your screen, and we'll address as many as we can over the course of the webinar. There is so much information to absorb about the fall of FTX, the ensuing crypto contagion, and of course, this week's arrest and charges brought by the SEC against Sam Bankman-Fried earlier this week. And we mustn't forget this has all taken place against the backdrop of a crypto winter and incredibly challenging macroeconomic circumstances. So turning to the panel, and by way of introduction, I'd like to ask each of you, in a sea of reports and rumours, what should our audience be paying attention to? And George, perhaps we can turn to you first for that one.
Of course, thanks, Natalie. My name's George Morris. I'm a partner at Simmons Simmons. We're an international law firm, and I lead on the firm's efforts in the crypto assets and blockchain industry. I've been working in the sector for about 7 years now. I think just to answer your question, Natalie, about sort of what's the most important things to look at the moment, I think the House committee that was formed yesterday that heard from the new CEO of FTX, who's currently running the liquidation process. That's an incredibly important thing to get the highlights of, primarily because it starts to establish just the sheer scale of the issues at hand, primarily in relation to this, obviously, the size of the numbers that are involved in terms of number of creditors and the amount of money that's outstanding, but also the activities that were taking place within FTX that have compounded this issue. Like, for example, yesterday, one of the revelations was that they're using QuickBooks as an accounts function, which is as a piece of software is fine, but it's designed for use by SMEs. As opposed to being used by multi-billion-dollar international companies. That's just one example of a number of things that were raised yesterday. I think the other thing that's quite interesting to read, mainly more of interest rather than actually genuinely providing you with insight, but is the leaked potential testimony that SBF was going to give at in the House committee yesterday, which he was unable to give because he got arrested before he was able to appear. But that is a really interesting testimony because it shows the sort of mindset that SBF is in and exactly how the business is being run, and also sort of some of the arguments that he's potentially going to raise as part of the criminal investigation.
Yeah, absolutely. It was definitely a thought-provoking session yesterday. Thank you, George. Gabby, perhaps over to you.
Sure. I think, one of the more interesting pieces, in addition to John J. III's testimony, was his initial sort of bankruptcy filing, where he went into detail on what he had uncovered so far. And even at such an early stage, I think it is interesting to note that normally you would couch your language in a legal document, but the fact that he was so I think forceful about the degree to which there had been a lack of internal controls, lack of, proper governance, management. I think that is telling in terms of, what the true state is, because if that was couched, then what is it that he really wanted to say, right? Yeah. I think too, just looking at, from mine, I always sort of do a key takeaway on, as a CPA, and Quentin and I can high five on this, but the importance here of appropriate record keeping, bookkeeping, and independent audit, especially in centralized financial digital asset enterprises. So those are my takeaways.
Thank you, Gabby. And James, perhaps you want to expand on that from the perspective of due diligence.
Yes, good morning, good afternoon, everyone. My name is James Newman, co-head of Perform Due Diligence Services. I've been performing operational due diligence for a good part of 20 years now. And as a firm, we specialize and are experts in operational due diligence for both TradFi and also for crypto fund due diligence. So obviously what we've seen in the last few months has been incredibly enlightening. If nothing else, one key message I would say the days of investing in crypto without due diligence is over, right? Or participating in this industry you really do need to perform good levels of operational due diligence. And the way I like to think of operational due diligence and investment due diligence and counterparty due diligence and background checks, it's all part of what anyone should be doing, particularly for an institution who's representing fiduciary assets or has some form of fiduciary responsibility, i.e. not your friends and family, but clients' money. You really need to be doing these levels of operational due diligence review. So what I mean by that is a risk assessment of corporate, of funds, of suppliers, of potential partners' operations, cybersecurity, governance structures, segregation of duties, and so on. And if you think of all of those I've just pointed out, you can relate them to FTX and go segregation of assets. Okay, that wasn't there. Fund governance structures, was that? No, that wasn't there. Okay. What about transparency? What about openness? No, that wasn't there. You know, these are sort of echoes of what we've seen all the way back from the Madoff days, where transparency and acknowledging and providing levels of information enable to get to what we call operational conviction needs to be there, always needs to be there. And I think that we're, you know, obviously incredibly excited to be in this space and helping our clients to achieve that.
Thank you very much. No, I think those risk red flags gave me a great segue to Kobe, actually, who perhaps wants to explore that a little bit more from your key takeaways from Merkle Science.
Yeah, thank you, Natalie. My name is Kobe Moran. I'm the lead investigator for Merkle Science. Before that, I was with the FBI for a number of years working in crypto crime investigations and cybercrime investigations. So one of the biggest things that I found is that with the recent hack that had occurred, that apparently there were little to no sort of cybersecurity within the FTX structure. I mean, you're running a multi-billion-dollar company that has tons of client assets that are ready to be essentially just moved right out from underneath your umbrella there. You need to have a better sort of security system in place. I'm not exactly sure what kind of security they had, but apparently it was very lacking. That being said, though, the hack that had occurred is only a small fraction of the overall total loss that is being, entirely calculated from all fronts. It may be kind of like the poster child of, yes, it's happened, now the hack has occurred. It may take eyes off of the overall fact that, this was an entire systemic collapse of a massive, sort of exchange. But with that being said, the hack is still a very important sort of factor within that. That this could have happened in between the time of filing for bankruptcy and regulators getting a hold of it. All these funds have been moved out in a very short amount of time. So I think from my perspective, it's an interesting point. I know we have a lot of risk management here. I like to look at it from more the investigative side, but that's just my take.
Thanks very much, Kobe. And Sue, finally over to you.
Thanks, Natalie. Sue Carpenter. I'm Director of Operations at CryptoUK, a trade association representing most of our panelists and members attending here. I think just summarising, obviously all of the panelists have made really valid points in terms of some of the key issues. There was a really interesting quote I saw come out of Congress yesterday that stated, this is old school fraud with new technology. And ultimately what we have to remember here is this is not crypto fraud. This is fraud using crypto as a mechanism to be able to defraud people from money and from their savings and their investment. So I think for me, the key takeout here, and obviously we'll touch upon a number of these areas, is obviously the whole lack of compliance and governance within the organisation has led to this whole downfall. And the fact that actually, yes, whilst this is a crypto exchange that has obviously caused these issues, we need to make sure that the focus is in the right areas in terms of what the regulatory response looks like and how we move forward as an industry to address some of these issues and concerns.
Yeah, 100%. Couldn't agree with you more, Sue. And I think, as goes an old school fraud, and subsequently has followed an old school arrest. And it's interesting timing, as Joey from the audience has highlighted, and it's definitely dominated the narrative over the last couple of days. And Gabby, it'd be great to hear from you, what really does that arrest mean? And the SEC currently has brought 8 separate criminal fraud and campaign finance related charges, and has certainly indicated that there may be more to come. What impact does that have both on customers who are hoping to be made whole following the collapse of FTX, and also for the wider industry as well?
So I actually think it's a good thing. And I'll say that because I think that, a lot of times when there are challenges with crypto, people say, well, there's no laws, there's no requirements. And I think, here we're seeing, although this, notwithstanding the fact that this really isn't an issue of crypto, it's an issue of fraud and, I guess, gross negligence in terms of management. I think the fact that there have been charges brought, that this person has been taken under arrest, all of that, I think, is very important to helping to begin the process of reinstilling trust and rebuilding repaired relationships with customers, with clients. And I think it's going to be a long road, but these are kind of the first steps towards getting there.
I think if I can just add to that, I think one of the really interesting things about some of the charges that have been brought against SBF is the sheer breadth that they're going for. So of course, the US is obviously famed for having quite a broad range of different offences that it can bring, in various different things. We always see things like wire fraud, for example, as coming up. But in this case, it's quite clear SBF is not going to get an easy ride in relation to this. My personal view is I don't think he was deliberately fraudulent, and fraud generally does require intent. To actually actively defraud customers, you have to intend to do so. Generally, I'm not a US lawyer, but I'm pretty sure that's the position, across most of the world. I don't believe necessarily he intended to do this, but I don't think he's going to be able to sufficiently defend himself to be able to prove that. Because if you hear what the committee was saying yesterday, there's certainly significant questions about the fact SBF clearly is an extremely intelligent individual. He's got a degree from MIT. He's got various different other qualifications to his name that make him clearly an extremely intelligent individual. And I just don't think people are going to be able to believe the fact that he was so negligent in operating the business, that all of this could have occurred. But regardless, I think one of the most important things to note about this whole thing is actually look at what the promises that were made by FTX to customers when they engaged in customer relationships with FTX. You look at the terms and conditions that they had. One of the most important pieces of it that's been focused on quite heavily is the clause that relates to whether or not a customer owns the assets that are held within FTX. And quite clearly, the terms said that customers would continue to own the assets and they were just held in safe custody with FTX. And FTX actively said that they wouldn't do anything with those assets. And clearly that was almost certainly deliberately broken. And of course, that's probably where the fraud charges will ultimately come down to, is the fact that there was a promise made in the terms and conditions that was then almost certainly deliberately breached. And that means that, the potential 85 years worth of prison time that all of those offences come with, at least some of those years might be realised in practice.
Thanks, George. And speaking of those customers, I think one of the main questions, immediately before we look forward to risk management and regulation is, what are the chances of them being made whole? Obviously, their contracts effectively with FTX would suggest that there has been a breach of contract, which is quite, clear to everybody. But is it likely that they will ever get any portion of their funds back?
So just on the legal side of things, so it's important to note there's multiple different entities involved here. FTX, I'm sure many people on the call have seen the group structure that was leaked last month, was a sprawling array of companies across the world, some of which were regulated and some of which weren't. For the customers that are papered to that have contractual relationships with the very few entities that remain solvent within the FTX group, which is primarily LedgerX in the US, and the Japanese entity, of which I can't remember the corporate name, but the regulated Japanese business. Both of those entities remain solvent, and therefore there is a possibility that they'll be able to get their money back if indeed the assets that are supposed to be in those companies still remain in them. But if you're papered to FTX US or you're papered to FTX.com, the international exchange, I think at the moment the liquidators have said that there's probably only around $1 billion worth of assets that have been secured. And that's going to be divided up against a lot of different people, and so in reality it's going to be very difficult to be receiving anything except single figure cents against the dollar, I would have thought, just simply given the the scale of it. I mean, we saw in SBF's leaked testimony yesterday, they've already paid $4 million to Sullivan and Cromwell to do the liquidation. So, you know, the money is being spent as we speak, in just keeping this process going. That's going to continue, of course, because there's a lot of money involved in liquidating these businesses when they're so big. There's going to be very little left for creditors when we get to the end of this process, unfortunately.
Yeah, that unfortunately does seem to be what is coming out from all the reports that we're hearing. And from the perspective of immediately after the collapse, of course, there was immediately a hack of over $450 million straight out of FTX. And Kobe, obviously, you've been tracking those funds on behalf of Merkle Science as their lead investigator. What do we know today about those funds that we didn't know 2 or 3 weeks ago?
So not a ton has changed in the sense that it's been moved, obviously, in between the time the regulators got a hold of it and that FTX actually shut down their internal dispensing of that. From there, a lot of that had been converted into Ethereum, a different sort of token called Paxos Gold, which is tied to a troy ounce of gold based in the UK. And it's all been kind of shuffled around using these sorts of bridges from Ethereum. Then some of it's been moved into Bitcoin, where a lot of these mixers actually exist that are still prevalent in the modern times that we live in. Would it go through one of those mixers? I would say it's highly likely. Otherwise, it'd be very easy for us to trace it directly to an exchange. The hack itself is just oddly timed. I mentioned earlier about cybersecurity of FTX and how that it was lacking, to say the least. Did somebody infiltrate the network, sit on it, and wait until the right time to move all these funds? It's a strong possibility. There's been conspiracy theories about it was the elite 10 of FTX that had conspired to withdraw internally to save themselves and fund their legal defenses. Other ones that have detailed out that, hey, it actually was the Bahamian regulators that came in and took that money so that they would be paid out first in order to safeguard their own interest as well. It's not exactly we don't have all the details exactly what occurred just yet. I'm hoping that within the next month or so that we'll be able to get a more clear picture from FTX as to when they lost access exactly, and when Bahamian regulators pick up that access exactly as well, and sort of audit the internal systems to find out, was it a truly unauthorized hack? Was it, as SBF says, it could have been a disgruntled employee who had somehow magically taken all the keys and withdrew that crypto? We're looking forward to seeing exactly where that moves to, say in the next month or whenever these audits get around to that.
Thanks, Kobe. That's really interesting. And we'll definitely be watching and waiting for what happens next with regard to those funds. And really, as we watch the situation unfold, the collapse, the hack, there have been a growing number of companies who've had to disclose their exposure to FTX and its related companies, FTX UX, Alameda Research, etc., which has been referred to as the crypto contagion. So from your perspective, how far will the contagion spread? And really, can our industry recover from the damage that it's causing, both from a reputational perspective, from a real customer loss perspective, and from a trust in us being able to move forward?
Yeah, thanks, Natalie. I mean, it's an open question at this point. I mean, how far will the contagion spread? I don't think we know. I think there is likely to be further ripple effects and more impact off the back of this as well. I think we always run the risk as a sector that when anything within the crypto world hits mainstream media, then it always becomes a vilified piece of approach. We are looking at less informed commentary. We're looking at populist headlines. We're looking at finding an opportunity to really kind of tarnish the whole sector with the same brush. And I think we are going to have to sit tight for a while and weather the storm, because I think ultimately we know that we have a lot of really good operators within this space. And we have a lot of member organizations that we represent who are doing some really good work in terms of ensuring that their governance structures are correct and that their risk functions are robust and able to kind of get them through these sort of situations. But yes, we're going to be impacted by this. It is going to set us back a while. And I think we really will just have to be in a position that once the dust settles, we're still doing the same amount of work to educate and inform the government and policymakers on the whole diverse nature of this sector and industry, and the fact that there are opportunities for really good businesses and good players here to come out of this looking whiter than white and showcasing the work that they are doing to mitigate risk.
100%. And I think that work is more and more important in the face of events like the FTX collapse. I want to open that question to the panel, really, in terms of your perspective on how this might impact the industry going forward.
Sure. So, I'll kind of chat a little bit. I think, these are key times for reflection. And I think that, one of the key pieces that we've seen from the side of the global DCA has just been a, rallying around sort of what we see as core principles. So really trying to bubble up and ensure from a point of, industry self-discipline, industry self-regulation, that there is a certain level of minimum expectations and behaviors in the industry, both technical and ethical. And so I think that one of the key pieces that will come out of this, I think, will be a greater emphasis on, industry coming together, industry starting to, I think, again, greater self-discipline, greater stewardship. And, hopefully it's one of the things that we come together around and come out stronger.
100%. And Gabby, just on that question of stewardship, actually just looking at some of the questions that are coming in from the audience, do you feel that will come from, an element of SRO, or do you feel that would be purely from regulation? There's definitely been arguments that the arrest of SPF is really regulation by enforcement, which, has an impact certainly, but it's not providing any guidelines for anyone who is looking to operate effectively and within the law going forward. So do you see more room for SRO as we look to tackle this problem?
So yes, I actually do. I think, there's a few things. One, I think self-regulation shouldn't exist in a vacuum. It's always a complement to formal government regulation. And I think that, that allows it to be more of a right-sized approach when it comes to government regulation. And then self-regulation really offering a mechanism by which the industry can keep abreast of shifts and changes, be flexible and responsive, but also provide a high degree of regulatory coverage. So I think ultimately it's going to be a bit of a combination, ideally. I think the degree to which that ideal outcome is realized, though, is dependent upon industry actors actually coming together and, I think voluntarily beginning that process. Typically, self-regulation starts from a point of voluntary action, and industry recognizes that it is no longer tenable to continue without some level of oversight. And so I think in this instance, regulators all around the world, the challenge in this space is a bit about, and I've seen in the chat box too, it is about education, it is about capacity, but I think ultimately it's going to be and come down to the ability of industry to really kind of take that first step forward, to begin to coalesce around, these kind of core principles, and to begin to, call out bad actors. So.
Just to add on that, I think on the self-regulatory question, I think one of the things as an industry we need to bear in mind is that trust between regulators and the industry at the moment is at its lowest point ever, I would say. And we need to bear that in mind because, as Gabby quite rightly says, SRO can't exist in a vacuum, and the regulators they're not going to allow it to exist in a vacuum either. So we're going to see a huge amount of regulation coming down the track. Obviously, regulators that are more bearish on crypto have been significantly buoyed by the FTX scandal and currently getting a lot of airtime, naturally so, of course. But SRO does work when it comes to restoring trust between the industry and regulators, because that at the moment I think is the number one priority, is to be able to say that this is a terrible moment for the industry, but ultimately it must be considered a good thing to get rid of actors who are ultimately in it to make short-term profit at the downside of clients and customers. And we're moving away from that as an industry. And some of the stuff we're seeing about proof of reserves and things like that is all good stuff, but there's loads more that needs to be done. I'm quite interested to hear what James and Kobe might have to say on this as well, about sort of how the industry as a whole can restore trust when it comes to regulators and more widely when it comes to clients, because I think for me that's the number one issue at this particular juncture.
Yeah, so I think that as well, to tack on a little bit to you saying that regulators and everybody has the least amount of trust, it also seems that retail investors also are at their lowest point right now when it comes to faith in cryptocurrency and how it's viable in both terms of usability and potentially profiting in the future. I mean, weirdly enough, FTX collapses, but LedgerX sales increase, tenfold because of the lack of sort of control over client funds. It's kind of a weird irony that exists that, I find that kind of funny. But saying that, I think that regulators are going to come down, like you said, in the future with pretty heavy-handed on exactly what exchanges need to do to better protect their clients and their clients' money more specifically. Will they come in and say you have to have X amount of reserves in order to fully be, stocked up on crypto, and that you're safe by our measurements? Potentially. I think this will finally really kick into high gear. Regulators not only in the US but across the entire world to actually start putting forward ideas rather than battling it out in the courts and in long spiels saying that I should be the purveyor of these sort of legality points because of X, Y, and Z points, and at the end of the day it's just ending with a stalemate. Hopefully this will actually clear up some sort of path forward that we can actually follow and actually keep people's money within a tolerant realm of risk next time.
Thank you. James?
Yeah, I was going to add to that on what George was saying there. I think that the regulation and registration with an authority of some sort at an instant will improve what I would refer to as a fiduciary duty. And George was mentioning the SBF or FTX or others that have probably gone before them, never sort of started out with the goal of being a fraudster or doing harm necessarily. If you go back through the records, most white collar frauds tend to happen as a result of something of an opportunity, if you want to call it that, or something changes, or they get greedy, or they don't act as an institution, as a fiduciary. And so we've, following FTX, there's this very fine line, I think, between outright fraud and then what's just turned out to be poor, negligent practices. And it's up for the judges and the lawyers to determine which side of the line that falls on. But I think what's really, really important for the crypto space is to bring in some form of principle regulation about how to conduct business, how to segregate assets, how to perform risk management. The sort of things that a lot of people, I'm sure, are listening in right now are like, yeah, well, that's how I'd manage my own money, let alone third-party money, right? So I think that's where it's got to be. And self SROs are another way of being able to achieve that, having those principles of how to manage money at the end of the day as a fiduciary I think is really the first way. If you want to make a big impact on the crypto industry in general, I think this is the way forward, as opposed to proof of reserves or even an external audit of the firm or something of that kind. I think those are more sort of micro measures as opposed to more fundamental change that needs to be seen to restore that confidence.
Thanks, James. And I think one of the things that's always interested me is, you speak obviously very articulately about the things that companies should have, and in a lot of ways that's 101, and it's how we manage our own money, as you say, let alone third-party money. But getting visibility into what companies are doing in order to protect funds is very challenging from a retail customer perspective. And I know you work with your clients on an institutional level, but can you ever see, or can any of the panel ever see, a space where this information is going to have to be made public in order for retail consumers to be able to make more informed decisions about the businesses that they are investing their life savings oftentimes in?
Well, I think that's probably where the regulator is absolutely important, you know, because obviously retail individuals do not have the means or the finance to be able to support the sort of necessarily the sort of due diligence work that we would do on their behalf. So where we would go through conflicts of interest, segregation of assets, corporate governance structures, cybersecurity, operational infrastructure, the chief operating officer, who's the CFO, are there related parties? Are there, you know, which all of these things, right? If you know about the FTX, you'll know all of these are like, you know, red flag, red flag, red flag all the way through. And of course, when we looked at FTX, you know, we identified certain elements of it that did look unusual, but fundamentally it was a lack of transparency for us that was the biggest flag. And ultimately, I think, you know, from an institutional perspective, if you're not getting answers to questions, then that's going to be your first flag, at least, to be able to say, well, if I can't get to the point of understanding an organization, how could I possibly entrust them with my capital?
Thank you. And moving back perhaps to regulation, but just before we do, George, there was a couple of questions that have come up in the audience that I think potentially you can help with. So one was from Lee Saga: if client money was stolen or taken unlawfully from them, where would they sit in terms of the recovery of that money when they're looking at all of the creditors and debtors to excuse me, to FTX?
I'll be honest, I mean, ultimately that it's a local law question slightly, but ultimately, yeah, when it becomes a case of criminal activity as opposed to just an insolvency, then there is a slightly different regime that applies in terms of whether or not you can get the assets back. Ultimately, you are allowed to try and recover the assets, of course, and you can trace them as far as you possibly can in order to be able to try and recover them. But there comes a point quite quickly where that becomes impractical and too expensive to do so. And I think in this case, given the amount of, the number of steps that have been taken with respect to, the assets, post them being originally used within the group, it's going to be very difficult for anybody to really trace the assets to a point to be able to recover them. And obviously, given the fact that we're talking about crypto, which in many cases involves anonymous or pseudonymous beneficiaries of transactions of some of these assets, it's going to become a bit too difficult to actually recover them in practice. Even though there is technically, there'll be powers to be able to trace them, it's probably going to be too difficult in practice to do so, unfortunately.
Thank you. And an open, quite interesting question for the panel, but I think we are all in agreement from the SBS perspective that he has committed a fraud, whether he feels he's responsible for it or otherwise. But one of the audiences asked, why do you feel it has taken so long for him to be arrested? And also, he's been able to be on stages and talking to the media and asserting his position. And also, is the timing of the arrest something to be taken note of, considering he was due to speak to Congress the day before he was arrested, or the day after, rather, he was arrested? Gabby, maybe want to start with you.
Sure. So I'm not going to speculate about, what the timing of the arrest, really, what the purpose behind that was. I think, in terms of the arrest, though, I think to me, it seemed to be like a relatively reasonable amount of time between. You have to understand, too, when John J. Ray III kind of came into his role, some of this is about trying to understand, what it is that has been going on. He himself even stated in the bankruptcy filing that this was, one of the worst cases of mismanagement. And so before charges can be brought, there has to be evidence to back that up. And so I think, it probably took a while to figure out or to get those pieces of information before the charges could be brought. And so, I think during that time, yes, was it strange that he was so visible? Yes. I think we have, Simmons and Simmons on here. I'm sure they can say it's typically not advised to be going on a media tour if you are facing charges. And so I think generally it probably does take time for people to become arrested. You just usually don't see them quite as visibly because they're most likely following legal advice to stay out of the spotlight in those cases. But I'm not a lawyer myself, but that's just my 2 cents on it.
Yeah, I think that's totally right. I mean, we saw, I think it was last week, that the former lawyer for Bernie Madoff was publicly saying, why is SBF even talking at all? We should be hearing nothing from him at all. I mean, the DOJ must be so excited by just waking up every morning reading the news about what SBF said again. A few weeks ago there were the leaked messages with, I think it was The Verge online publication, where he essentially just admitted a lot of stuff that no lawyer would have ever suggested that he say in public. And that's going to really play against him. I actually thought the arrest came quicker than I was anticipating. I think in many cases it can take months and months to try and actually get a case together that's strong enough to be able to bring these charges. I think there's obviously a lot of political will to get something done on this front very, very fast in the US. There's also the cross-border angle as well, because of course he's based in the Bahamas, and there would have been a lot of international coordination between the US and the Bahamas when it comes to actually, working out the position with respect to extradition, and also sort of, just essentially getting the Bahamian authorities to support with the actual physical arrest. There has been some back and forth between the US and the Bahamas with a jurisdictional wrangle with respect to the filings in terms of insolvency. So I think the Bahamians filed for they got their insolvency proceedings in first before the Chapter 11 stuff started, and that did create a bit of a tension between the two. Ultimately, the US won because they are by far and away the more powerful regulatory authority, but that will have also taken time because there will have been negotiations in the background about how that's all going to work.
Thank you. That's very interesting to hear as I lose my voice a little bit. And I think, one of the things that we've certainly seen a resurgence of, whether it's on, conference stages with or without SBF, whether it's in the news or when we hear individual congressmen or members of parliament speaking, that unregulated Wild West narrative is really starting to make an appearance. And certainly looking at some of the conferences that have happened since FTX, a lot of the narrative is around, regulating an unregulated space in a lot of ways, which I think is probably quite an unfair viewpoint of where we are from a regulatory perspective today, although obviously we all acknowledge there's much more to do. And I think whilst, as we've said, SBF's arrest represents arguably regulation by enforcement, it doesn't provide any clear guidelines going forward, which have been desperately needed and called for by the industry and by its consumers for a long time. An SEC Commissioner Pierce, speaking to CoinDesk, stated that the collapse could finally be the catalyst for regulation and prompt SEC and CFTC to work better together, rather than, as Kobe mentioned a little earlier in the call, trying to claim jurisdiction over crypto, over digital assets and Web3, and really resulting in a stalemate that doesn't produce a great deal of helpful legislation for those who are trying to act within the law. And Gabby, again, going to you, I think it would be interesting to hear your perspective of whether you feel you foresee more coordination using this as a catalyst, and whether it will perhaps put us in a better position going forward.
So I do think that you're going to see, additional regulation in this space. What I hope is that it won't be a knee-jerk reaction and an overcorrection, so to speak, in terms of where, what is appropriate and reasonable, and to ensure that that regulatory reaction maintains balance. So what I mean by that is balance between helping to foster innovation, job creation, GDP growth, and then also protecting consumers and protecting market integrity. Do I believe that this will help bring regulators together? Yes and no. I think you're still going to have some of the same challenges regarding turf wars that we've seen in the past. I do think, though, that there's going to be additional pressure, and you may even see new entities kind of entering this space, not recently created, but rather other agencies and regulators, I think, starting to step into the fold in recognition of the importance of this space, but also the need for there to be greater communication, greater education, and internal awareness and capacity in order to address some of the issues related to crypto regulation. I think ultimately, we will end up, as always, with an imperfect solution. But again, I think with actors like CryptoUK and the global DCA that are trying to, engage around this concept of self-regulation, I think what you're going to find is that that mechanism, if we can bring industry around these concepts, that can be very important to helping to shape the overarching outcome that the regulatory environment takes. Because at this point, regardless of regulator, because this is such a new industry, the expertise, the sophistication, the understanding, and the thought leadership around how to regulate this, it doesn't necessarily exist in its best form in a formal government regulator yet. It exists in industry. And so if we can come together and, work as an industry to build that kind of a foundation, we can either, again, develop this self-regulatory mechanism and or lend some of that, thought leadership towards the eventual outcome that we're going to see from a formal legal and regulatory framework.
Just to add to that, I think Gabby's point around knee-jerk reaction is really important, because one thing we have that's quite unique to the FTX issue is we have a number of regulators around the world who are feeling quite embarrassed on their own position, and that's going to lead to overreactions. So, the US, obviously, there's a significant question about SBF's influence, the amount of money he spent on the campaign trail, and all the activities he was doing to lobby for an increased level of sort of sensible regulation in the US. Clearly, as a result, there's quite a lot of embarrassment with respect to, how much influence he potentially had as a result, just simply his financial power to be able to do so. We also have international regulators who, had put their faith behind FTX without having done proper due diligence, and they are going to be wanting to repair their own reputations on the world stage. The easiest way to do that would be to come down hard on the industry, of course. So I'm nervous about that. We're seeing certainly some of the engagement that I've had with regulators the last few weeks and with clients. We're also seeing that we are seeing more coordination, particularly within Europe, across regulators who are now talking about individual businesses and sort of checking between each other, kind of what crypto businesses are doing. We're seeing that across a number of different fronts at the moment in the EU, particularly, which I think can only be a good thing. It's something that the industry is going to have to, we're just going to have to live with this. This is a consequence of all the issues we've had in the industry over the last few years. It's unfortunate from the perspective of revenue generation, of course, but I think it's necessary to be able to protect clients and to protect the businesses themselves and to make sure that reputations can be restored.
Thank you. And just taking that on from that comment about reputation, one of the questions from the audience is, does the panel feel that the SEC's credibility has been damaged by Gary Gensler's alleged association with people close to SBF?
I don't think so. As a general way of saying it, I don't think he's going to have too much problem there. Say what you will about Gensler. People like him, people hate him. People say he's, paving the way for the SEC in order to regulate all crypto. Other people saying he's dragging his feet. I think it's just going to be one of those things that people will use. Either they'll use it in their ammunition to, blast Gary Gensler, or they will just kind of dismiss and say, well, he has associations with him, but then again, they're a massive, sort of financial institution. He should have sort of associations with them. Yeah. So it really depends on the context, I think.
Yeah, and I think if we're going to gather ammunition around, regulators that are talking to members of our industry, it's not going to end well for anybody. That's what he should have been doing. He should have been talking to large financial institutions within the Web3 space in order to help create better regulation. As you say, he can be polarizing, but I don't think he can be criticized for that. So this has taken place. We've got two inquiries effectively on the go at the moment with APPG and TSC here in the UK. How much impact has, the FTX conversation had on the inquiry, on the witnesses and the questions that are being asked by representatives there?
Absolutely. I mean, obviously this hasn't gone ignored by the UK government, and whilst these evidence hearings have been taking place, there has been reference made back to FTX. But I think it's actually provided a really good platform for the representatives on these panels to be able to put some context around what the FTX fallout does mean and the nuances within the whole crypto sector as a whole as well. And I think it's also quite a valid point, just going back to some of the earlier panelists' comments. Yes, we need to get better regulation. And I'm pleased to see that we haven't had an immediate knee-jerk reaction from the UK regulators and the UK government. But this isn't just about regulation being written. This is also about how we effectively implement, monitor, and track that regulation is being adhered to as well. And I think it goes back to some of those earlier comments that, yes, some of the regulators may well have egg on their face at the moment because they're looking slightly embarrassed. But it's pointless just having the guidance in place if there's nobody there to enforce that and to make sure that people are adhering to the best practice that's actually been put out there as well. So in answer to your question, Natalie, yes, the government are obviously very interested in what the impacts are here. And I think this really gives us a great opportunity as a sector and as a trade association of Crypto UK to help build upon the education programme that we've had with the MPs and the Lords that we're working with within the APPG, but also the more broader sector and the public and the press to get them to understand actually some of the issues that we're discussing now about what this actually means, what the fallout is and what the implications are. And to make sure, going back to Gabby's point, that anything that we do moving forward is measured, fit for purpose, balanced, and isn't just in response to this particular issue.
Absolutely, I couldn't agree more. And Gabby, going back to you and really what the industry can do, we've spoken a lot about what regulators can do, and we've touched upon education, we've touched upon the need both on the consumer side, but also on the regulator and policymaker side. And with Global DCA, you were very quick out of the gate to react almost immediately when it happened. And you've been coordinating a response from the industry, from your members, but also bringing in CryptoUK and other trade associations as well. It'd be great to hear, more about the initiative that you're spearheading.
Sure. So from Overside, we have stepped forward initially with an open letter to the digital asset industry, where we highlighted some of the core areas that we believed were both missing within FTX, and then I think can help to at least, like I said, create that solid foundation for the industry to move forward. People often say that there are, a variety of different voices in the digital asset space, but the reality is that, especially around some basic core principles, you'll find that most firms agree to things like you should have proper record keeping and accounting, an independent audit. You should have, appropriate risk management and modeling, internal controls and governance. I think all of these pieces are not that extreme. And so we've actually started the process of beginning sort of that core principles conversation with, broad brush strokes. And now we've assembled a steering committee that has been working on elaborating each of those 6 core principles. And these will really become the foundation that we'll step forward with when we look at, how and in what way we'll begin to self-regulate. I think, Quentin made the point as well. It's great that you see a lot of firms coming forward now with things like proof of reserves or, working to have independent audit. And that's all good on a micro level. But the truth is that, you have gone so far beyond the pale with this industry that in order to reinstill credibility, in order to stand forward strongly and to have a strong future for digitally native centralized financial firms, you have to come together as an industry. And that's the way that, has always been taken by industries that have found themselves in very similar situations. We always joke that with great power comes great responsibility. And I think in this instance, that's 100% true. And the way that an industry takes responsibility is through self-regulation.
Yeah. Yeah, definitely. And opening that question to the rest of the panel, you know, what can the industry do beyond what Gabby has articulated to make sure that, you know, something like this doesn't reoccur? And whilst this may be the actions of one, you know, illicit actor who's acting in a fraudulent way, what can we do as an industry to make sure that our consumers are better protected as we go forward?
I'll jump in there now, if that's okay. I mean, obviously, as a trade association, when this news broke, we wrote out to all of our members. We wanted to reiterate some really valid points to them. I mean, we're talking about self-regulation here. We ask our members to adhere to a code of conduct, which talks about best practice and the ways that they will operate to ensure that we do try and prioritise consumer protection and the reputation of the industry as a whole as well. You know, we've talked about ensuring that they have robust safeguarding of clients' funds, talking about the fact that they need to make sure that there's a default of zero leveraging of client funds, and at a bare minimum, ensuring that any high-risk strategies are clearly communicated to any customers that they have. It's about taking responsibility as a sector and as an industry, but about collaboration as well. And obviously, we're really keen to make sure that we can represent as many industry players as possible and work in a really collaborative way to really help shape the way that regulation moves forward. But the industry obviously needs to work together and support each other. And I think within the crypto sector, we do see a very collaborative community and a very collaborative industry, where we know that the good players want to come out of this with a really solid framework for regulatory guidance and a way of operating that they can adhere to and that they can be monitored and measured against. So for me, I think it validates a lot of the work we've been doing for the last few years as CryptoUK, and we will continue to do to ensure that we bring the community and the industry together and find ways to provide opportunities to support the regulators and the government in helping to shape that regulatory guidance.
Yeah, and ensuring, I think, also that there's not that knee-jerk reaction, as you said, and just looking at the comments in the chat. And Matthew, I do agree, you know, the actions of one individual, we desperately don't want to see that over-regulation is the result of that. And so I know that's a big part of what CryptoUK and Global DCA do as well.
I think if I can just add with what might be perhaps a slightly unpopular opinion, but I think if I'm sort of the ultimate pragmatist, and I just feel like one thing as an industry that we need to do is to start working with the regulators as opposed to warring with them, because we're never going to win this war. You know, when you've got a regulator that wants to actively shut down the industry and just kill it, I totally understand that. But in most cases, regulators actually, having discussed with them a lot across the world this issue, most of them want to support innovation. They may not show it in the right way or the way that we wish that they would, but they are focused on innovation because often they have a mandate to do so. But they want to see innovation done in the right way. And we saw the European Banking Authority a couple of weeks ago in an unofficial blog post on their website, which of course makes it basically official. They said we cannot give the space for innovation where that innovation is not being done in the right way. And that, you know, that's, for me, that's just fundamental. If we don't accept that and start working with the regulators and trying to educate them, help them develop regulation, as Sue was saying, really kind of, you know, go with them on this, ultimately we're going to end up losing the war and either, you know, being regulated out of existence or going to have to go and work in the shadows in offshore jurisdictions and be forever hunted down across the world, which frankly is just not possible to do long term. So for me, it's about embracing the fact that we have to work with regulators. We've got to make them, you know, bring them into the fold so that they understand the benefits of crypto and that they really see that the industry is one that is capable of being regulated and have that stamp of approval, because otherwise it's never going to work, unfortunately.
I think, if you don't mind me just stepping in again, I mean, George, one of the things that was spoken about earlier this year, and when the announcements came out from Treasury around the support that they wanted to put behind the crypto business, was about the formation of a crypto asset engagement group. And I think it touches upon some of the points a number of the panelists have made, is that it's about bringing together the industry, the regulators, the government, people who are innovating in this space, people who can see where the opportunities are, and also people who can see where the pitfalls are in terms of being able to have some very open and honest dialogue and discussions as to how we can move forward. Now, we haven't seen anything move forward with this from the UK government yet, but we are still pushing for this and lobbying for this, because I think this kind of cross-industry, cross-sector, cross-regulatory group is a really good approach to take to start addressing some of these key issues and finding solutions for the industry as well.
Absolutely.
Talk about knee-jerk reactions. The actual industry itself kind of came out with the proof of reserves, everybody rushing to get that out as fast as possible. that, they were solvent, they had the funds to do so. That was a wonderful, I think, kind of piece of media, publishing those reserves by saying, we have X amount of digital assets in cold storage currently. Looks great from a, hey, we're still solvent, they just went insolvent. We can still float our customers for the time being. But it's kind of like putting a Band-Aid on a massive like water pipe burst. It's not going to solve the entire problem. So yeah, it's kind of a nice thing to have at the moment, but in going forward, like George and Sue were saying, working together instead of warring with regulators is going to be something that is going to need to find some sort of common ground. I know that the industry does like to play a little bit of the victimized, saying, we've been waiting forever and ever and ever. But then you get bad actors that, happen to be on the scene that have been somewhat regulated or somewhat verified, legitimized, and then FTX happens and it pushes everybody back to square one again. So going forward, we really need to find a quicker, more efficient path than the past times that we've tried.
I think if I was just to comment on the proof of reserves aspect there, which is an interesting one, because proof of reserves really have to look very closely as what that means and what that actual exercise is doing. It's not an audit, it's an attestation for the first thing. An audit is where you actually go back and on perhaps on a sample basis, but you prove an asset exists or you prove a liability exists. An audit is also on all assets and liabilities, not just necessarily reserves. And then what is reserves? Does anybody actually know what means by reserves? Reserves means effectively that you're good to pay your liabilities. But as far as I understand it, with the sort of proof of reserves that I've seen, it's looking at on-chain reserves. And so that won't include in necessarily any off-chain liabilities that also may need to be covered. So I think it's going to be a standard that's going to be used and come through, but I don't necessarily feel that, or at least my wish is that people don't rely solely on proof of reserves. I certainly think it's a good practice, but you've also got to look at who's doing the checks and what those checks actually involved. What I'd like to see, albeit of course with FTX there were audits of the FTX US, but there was no audit of Alameda. But what we would need to see, I think, is audits that are made public. In the UK, if you're a private company of a certain size, you register your accounts and audit on a public website. And so it comes all back to transparency, providing that level of transparency of just the fundamentals, even before you get down to, I think, rulemaking and regulation and definitions, and if it's a commodity, is it a security? Just, I think, the very basics of how to run a business on behalf of when you're managing third-party money. And transparency is key. And then the due diligence that's applied to that, so you can get and understand how a firm is managing that money or managing a platform or whatever it may be, I think is critical and key. You do those simple steps, I think you'll make progress. And the last final point I'd make is these groups do need to spend money, right, in this area. When it was a boom market, when crypto and the markets were going in only one direction, well, I didn't need to spend any money, right? It was all good. But now you need to spend money on some of the boring stuff, on structures, on frameworks, on getting a chief operating officer in, on getting a compliance officer in. Even if you're not regulated, get a compliance officer in that can help manage conduct that Sue was referring to, and code of ethics. All of these things that we expect to see or we look for in our due diligence, regardless of whether the entity is regulated or not, because a lot of these things, a lot of these principles are good principles and are not necessarily getting into the pros and cons or the specifics of any particular specific rule or regulation. That would be my recommendation.
Thank you, James. some really useful information in there. And I think we're very, very close to the end of time for the session. Unfortunately, this is definitely a topic that we could spend many hours on. I really want to pick up, George's clarion call and the work that Sue and Gabby are doing. If you want to get involved with regulatory engagement, if you have passionate views about education or making sure that we are well represented in the industry, please do get in touch with them, and they will be able to tell you how you can help. A huge thank you to our panel for joining us today. We hope we will hear from you again soon. As I mentioned at the top of the call, the webinar will be circulated to everyone afterwards. And a huge thank you to our audience for joining us and being so active as well. Some great questions. Thank you very much, and wishing everyone a really good day.
Thanks, everyone.
Thank you as well.
Thank you all.